Good morning, good afternoon, good evening, whatever time you are watching and or listening to this, welcome back to another episode of Drive Time Crypto with me, Crypto Chris, where I cover all the latest news and events happening within the crypto and blockchain space. With that being said, if I could ask a massive favour, as always, if you could give me a like, if you could give me a comment, or even better, if you could subscribe to the channel, it really will help with the YouTube algorithms and help me grow the channel. With that being said, let's start the journey, start the engine, and let's get going. First up is always the pit stop around the price news. So, at the time of recording this, having a look at the markets, we are having a red day. The markets have had a pullback, and it's fairly considerable pullback. You're looking at around 10% on most coins, and Bitcoin was the one to lead it. Bitcoin drops by 2,000 in minutes. Here are the key factors of the slip below 59,000. This was quite popular news. Bitcoin is under 60,000, but should traders sell or hold now? Another curveball is being thrown at the crypto industry right now, with Bitcoin and Co collectively bleeding on the charts. It's a very strong word to use, bleeding. If you've never experienced a 10% drop in Bitcoin, welcome to the market. You must be new. It's nothing crazy. We've experienced it multiple times below, but nevertheless, with Bitcoin dropping below 60,000, there might be a little bit of panic settling in. Only if you've just got to the market that it will be settling in. It is nothing new, this. And next one, it says Bitcoin price dips similar to that of 2017. Bitcoin has already dipped below $60,000, but overall Bitcoin price action suggests that the amazing 2017 bull run is still in play. So if you are not aware of this, a lot of the analysts are thinking that the structure and the on-chain data and the price movements are happening of that like 2017, and they're exactly mimicking it, and that's why the sentiment is that we're still in a bull run and the prices are going to go up. The reason why we've seen the prices dip recently, I believe, is because there has been a lot of longs liquidated. That is where the price has been manipulated by whales, which are people that have a large amass of Bitcoin, and what they do is they move the prices around. So if there's people holding long positions thinking that the prices are going to go up, as they move the price down with their masses of Bitcoin, what happens is that they all get cashed out. The long positions, they get liquidated. What that means is that all their capital on the exchanges, that automatically gets cashed in, and their long position has to be paid, which is why the whales move the price down. And once they've liquidated the longs, what will then happen is they will then buy the dip, as they say. They will buy the Bitcoin at a lower price before moving the markets again and sending the price up. And it's mimicking that of 2017 apparently. Bitcoin price dips matches October 2017, with Bitcoin's explosion still forecast before 2022. What is wrong with me tonight? Even opportunities to buy the dip match up almost to the day with Q4 2017. So Bitcoin has dipped below $60,000, but Bitcoin price action is still mimicking the eye-popping 2017 bull runs. So if you can see that, I'm not sure whether it's going to come up clear, but it's just basically it's putting 2017 against 2021, and it is showing how on the 18th of October it tested the 0.236 retrace, and on the 10th of October it tested the 2.3 retrace of this year, and it's now saying that we're expecting it to push higher, and this price graph is actually showing it between 80 and 88,000, somewhere around there, and that is quite a conservative price that is being predicted there. A lot of them think that it's going to go a lot higher. Who knows? We'll wait and see. But yeah, I think it's just a lot of manipulation by the whales at the moment, liquidating long positions and taking full advantage of the power that they can have on the market when you hold such an amount of Bitcoin. Other price news, Ethereum's price predictions. Ethereum loses 10% to trade below 4,000 in fresh dip. Well, it's always pretty inevitable. If Bitcoin pulls back, the rest of the market seems to pull back with it. And that includes Ethereum. So Bitcoin's had a 10% pullback. Ethereum's had a 10% pullback. It doesn't always follow it, and it shouldn't really follow it, but it does. And when Ethereum pulls back, that means that a lot of the altcoins pull back because they are ERC20 coins, which are built on the Ethereum network. So it only makes sense that if Ethereum pulls back, the other coins that are built upon the chain should move back as well. But it's quite frustrating in a way, but not surprising that the price pulled back. But because today we had the upgrade. The Altair Upgrade goes live today, and this is considered one of the major upgrades to the Ethereum network, which is going to help it take it from the proof of work to proof of stake. So we had a couple of months ago the London hard fork, the EIP 1559, that was launched. That was the one where it changed the way the miners were paid, and this is what has resulted in the Ethereum burn, making it deflationary. I can't remember what price it's up to. It's a phenomenal amount of Ethereum that's been burnt through that upgrade. But there has been this second upgrade onto the mainnet, the Altair Upgrade, and that has gone live today. And you've seen a 10% pullback in Ethereum. That's why it's frustrating, because it's not logical. You shouldn't see a 10% pullback in a network that's just done a live upgrade, which seems to have gone successfully, which is going to improve the network. It's going to improve the efficiency. It's going to improve the transactions. It's going to improve the fees, everything like that. That is a successful upgrade, yet we still see a 10% pullback in the price. It's not logical, but then again, crypto space, it never does seem logical, so there we are. But the main and popular price news, and you cannot get away from it. I covered it yesterday, and I'm going to cover it again today, because yet again, Shib Inu hits a new all-time high, becoming a top 10 coin. So when we were going around the price is at the end of the video, I said, could it push into the top 10? Well, here we are. By market cap, it has made it there. I do not understand this. There is so much hype, so much momentum in Shib Inu at the moment. It is ridiculous, and it has done what it set out to do, because Shib Inu believers and the community said that the coin was made because it needed to, it was there for it to become a proper challenge, and it was going to be a legitimate coin with legitimate uses, and show that Doge was made as a joke, but this was the real deal. And nevertheless, Shib Inu just flipped Doge. What next for Shiba price? Literally, you couldn't get away from it. Time to cash in. Shiba soars 40% and snatches Doge position in top 10. And they're putting it down to some of this. Shib Inu Turkish exchange lists Shib, helping it to surge to new all-time high. And this is the one that blew my mind. I didn't realise how much it was up. But Shib Inu up over 900% in the last 90 days, as petition for Robinhood listing surpasses 340,000 signatures. So this is what I mean. The community behind it is a really strong community. The rallying to get different stuff done, they're really building a momentum, and they see it as the next milestone is that they've got to get on Robinhood. And the reason why they want to get on Robinhood so badly is because Robinhood lists Doge, and a lot of the profits from Doge for Robinhood comes from the Doge transactions. So they see that if they can get the Shib Inu coin onto the Robinhood exchange, then it's just another step in validating the fact that Doge is not credible to what Shib Inu can do. Nevertheless, you know my feelings from the video yesterday. I'm quite skeptical of it, and I am going to say this now, and it is not financial advice, and take of it what you will, do your own research. But if you are ready to understand why you need to be careful with what you invest in and give your money to in the cryptocurrency spaces, just keep an eye on Shib Inu, because I think that the dump is going to be absolutely biblical. And I feel sorry for the people that are going to be holding the bag at the end. I'm not saying that the coin's going anywhere. I am not saying that it is a rug pull of any sort. But the fact there is 395 trillion coins out there that have seen a 900% rise in the last 90 days. There is a lot of people in a lot of profit, and they are sat there and they are thinking, I could take a lot of money out. You're up 900%. Just think about that. If you was up, if you even at a little amount. Imagine if you'd have put £1,000 or $1,000 into it. You're up 8,000, 9,000, sorry. You're up $9,000 in the last 3 months. Crazy money. So I think people are going to be wanting to take profit soon. And the moment that you see that the price starts to curl off, I think it's going to be cataclysmic. I think people are going to see the price plateau a little bit, fall down a bit, and then people are going to panic and think, no, I'm taking my profits out. And that is going to have your snowball effect. And like I said, you are going to see a hell of a wick down. That is my personal opinion anyway. Like I said, it's not financial advice. That do your own research, but I think the dump's going to be biblical. Anyway, with that being said, I'm not going to cover any more Shib Inu news. I think that'll put too many tabs in it to begin with, but I just wanted to show that, yeah, it's taken over doors, which they wanted to do. I've shown you why they think that the listing in Turkey has helped it, and what they think about Robin Hood trying to get on there, and the fact that it's up 900%. Crazy. I didn't think that it'd have much more to move, but yeah, it's moved a hell of a lot today, so I'm not even going to say what I think it might do tomorrow, because it'll only go on to surprise me again more or less. Anyway, with that being said, let's pull out of the price news pit stop and continue along our journey. Next up on the journey, the next pit stop, and this was really popular news again. It says Cream Finance reportedly suffers major loss in flash loan hack as token crashes by 26%. $136 million lost as Cream Finance suffers another flash loan attack. Take note, another. And the last article I'm going to pull up on it, because there was more. Cream Finances suffers third hack, loses over 130 million. Cream Finance, a DeFi lending protocol, has been hacked for over 130 million, marking the third hack suffered by the protocol. Cream Finance has been hacked, losing over 130 million. This marks the third time the DeFi protocol has been hacked. Cream Finance is a lending and borrowing protocol that runs on Ethereum network. The attack, a flash loan identified by PeckShield Inc., resulted in mostly Cream tokens being stolen. And this is far from the first time the DeFi protocol has suffered a major attack. In February, hackers made off with $37.5 million in a flash loan attack, tanking the price of Cream by 30% in just 1 hour. So, yeah, 3 hacks on the protocol. It just makes you open your eyes. So if you the way that it works is a DeFi protocol that is for lending and borrowing. What happens is people put their own crypto on there, and what this does is it provides liquidity for the protocol, and that allows people to trade and borrow, lend and borrow the different crypto that's within that DeFi, and they earn money off it basically. So that's what they do. They put the money in, they lend it, just like a bank lends normal people money within the fiat currency market. This is just done on a decentralized protocol, but this is why you've got to be really, really careful and understand where you're putting your money. Because it's DeFi, because it's decentralized, there's nobody that you can go to. Your money's in there, and if this hack happens and your money disappears, you don't walk into a bank, you don't walk to regulators, you don't have any form of comeback to it. And just like that, your money can disappear. So you've really got to understand what you're doing when you're putting in money into a DeFi protocol. This is why you do see the likes of the SEC making comments on the DeFi space and how it is going to be in trouble if it doesn't get regulated soon. How they're going to regulate a decentralized space, I do not know. But nevertheless, if this goes to highlight what can happen within a decentralized space, that there are very smart people out there. I'm not saying they are nice people or worthy people of time, but they are smart people that understand the vulnerability of some protocols and use it to their advantage to manage to hack in and get money out. So when you put your money in these DeFi spaces, you've got to understand that. You've got to know. You've got to be 100% confident that their backdoor coding is absolutely watertight. And if you are not, you shouldn't be putting your money in there. It's risk reward. People do it because there is the reward for it. I've never done it. Probably never will do. Not until it gets a lot more secure or a little bit less risky. But nevertheless, yeah, that was really popular news that for a third time, Cream Finance has been hacked. Which, what makes it surprising for me is the fact that, alright, if it gets hacked once, you go, maybe there was a backdoor and they'll sort it out, and, you know, it could happen to anybody. The second time, it's like, really? Really? A second time? Right, but the money stayed in there. People were still willing to do it, so the rewards must be good. But now a third time, I don't know where this is going to leave Cream Finance as, or how the Cream token will recover. But we will wait and see. But yeah, if you've got money in Cream Finance, I hope it was okay and safe and didn't go. But there we are. That's the DeFi space. That's the beauty and the pain of a decentralized platform. And with that being said, let's pull out that pit stop and carry on the journey. Next pit stop on the journey, and we are back to a credit card provider. This time it is Visa. Yesterday I covered MasterCard and explained how they were diving deep into the arena now after seeing Visa doing so well, and all of a sudden the very next day there's news about Visa. Visa invests in credit card provider Deserve after BlockFi credit card success. And this is why MasterCard are following Visa quickly, because this comes as Deserve's BlockFi Visa credit card is approaching $2 billion in annualized transaction volume. So there's been $2 billion worth of transactions on that credit card. And MasterCard are like, whoa, you know what? I need to get in there. And so it says, Visa's Vice President of Crypto has expressed positive sentiments regarding the company's investment in Deserve and looks forward to more partnerships with crypto companies to drive engagement and loyalty programs. And yesterday on it, as I mentioned how Visa were into the Crypto.com card, that you can see the BlockFi card there. Some of them are only available in America and the others are available globally. I don't know what this is going to be. And it says Visa has announced its investment in Deserve, a company that provides turnkey credit card services for the digital world. Deserve has seen significant success with the BlockFi Visa card. The card rewards 1.5% in Bitcoin for each purchase, making it easy to acquire Bitcoin without having to go through the exchange. The payouts increased to 2% after $50,000 is spent. A BlockFi account is necessary to receive the rewards. So yeah, they're expanding more. They're already deep in the space. They've got NFTs. They are offering the cards. They are heavily invested within crypto. Good for them. It's good to see, but I just think it's quite funny how after a little bit of MasterCard news, all of a sudden, bang, Visa straight back in the news, straight all over it. But nevertheless, we're gonna continue to see this kind of movement, because yeah, that along with this, Visa and MasterCard really want to cement the place within the industry, because you have got the likes of PayPal offering a platform to buy and exchange cryptocurrencies, and as it becomes more popular and people start to understand and use the currency more and more, as more retail piling to the industry, and I'm not talking tomorrow or a couple of months, I'm talking maybe a few years down the line, there's the real possibility that there isn't going to be really any need for the banks to carry out transactions for us, and it's going to be done through exchanges. And I don't think you are going to get new exchanges coming through, because obviously as the space grows, other people are going to want to start their own exchanges. But for the heavy hitters, just like you've got heavy hitters in the banking world, and you might get new startup banks, but you know your core ones anyway in America and your core ones in Europe, etc. Now you've got your core exchanges, and these are all over the exchanges providing their card services, knowing where it's going. So yeah, that's just the Visa providing another credit card. So yeah, we'll wait and see. Hopefully it's global. I'd love a credit card that transacts in crypto and gets me crypto rewards, but unfortunately it isn't available for us over here in Britain at the moment, not to my knowledge. If it is, please drop a comment in the video, let me know, correct me if I'm wrong. And yeah, with that being said, let's pull out this pit stop and carry on our journey to the next one. And in the next pit stop of this journey, we are going to just cover a little bit of news that was covered on Blockworks, and it is about staking. And it reads, staking is an $18 billion industry, says Staked. Proof of stake shares of the total crypto market cap has hit 54%, posting quarterly growth of over 100%. Staked reports in its recent Stake of Staking reports. Wow, that was a line and a half. The market cap for the top 30 proof of stake digital assets hit an all-time high of $594 billion. Wow, or just over half of crypto's total market cap. Thanks to the growth of proof of stake, projected staking rewards are set to hit almost 18 billion, representing a 43% increase over the last quarter's projections. 2 years ago, when the concept of staking was first announced, it was relatively niche vehicle limited to the Tezos or Cosmos and the first proof of stake crypto protocols. Fast forward to today, and the industry is an $18 billion behemoth, thanks to ETH's 2.0 proof of stake campaign and institutions' quest for internet bonds, with over 24 proof of stakes protocols on the market. So it's quite interesting that they put ETH's 2.0 proof of stake campaign, because that's basically that you've got to wait until Ethereum's 2.0 is launched. But at the moment, I think I'm going to say about 2 billion, maybe a bit more. I might be completely off on that actually. But yeah, there's a lot of Ethereum that is locked within the Ethereum 2.0 network, which is sat there as a proof of stake, and they are earning rewards on it as we speak. They can't take the rewards out at the moment. They've got to wait until the 2.0 proof of stake protocol is launched on Ethereum. But nevertheless, there is a hell of a lot of other proof of stake networks out there that people are making passive income, and I think it's going to be massive in the future. People are going to make a healthy passive income. The early adopters anyway, the ones that are early into this space, that can amass enough coins at the moment so that when the coins go up in value and you're still earning that kind of reward from the proof of stake, then yeah, it's going to prove a really fruitful passive income in years to come. If you're not aware of what proof of stake is, so basically on a proof of stake network, on the protocol, all the nodes that are on that protocol, as they validate the transaction, they are rewarded. And the way that they are rewarded is what you have is you have delegated pools which are related to the nodes. So the more that's delegated into it to a certain extent, that then shows that people have got faith in your node and you've got the uptime, etc. There's quite a few parameters to it, but basically, as you put your money into that delegate pool, it's related to that node, and every time the node completes a block on the blockchain, it takes the reward for doing that, and then that is split among the people that have had the faith to delegate their coins within that staking pool. And that's how it works, basically. Cardano, I personally got some stakes in Cardano. Songbird, I've currently got some stakes in the Songbird one. And Crow, I've got some stakes in Crow as well. And I do like seeing, it's nice. You put your crypto there and you go on and you check and you're like, oh, made some free money. Who doesn't like free money? Everybody likes free money. So yeah, with that being said, it's like you can see now with the figures that were being taught there, it's just going to get bigger and bigger, and it's not going anywhere. So yeah, with that being said, let's pull out this pit stop and carry on the journey to the next pit stop. So the next pit stop on the journey is to a news article that wasn't which wasn't popular, which should be very popular, because the Wu-Tang Clan's unreleased album changes hands from Martin Scherkel to a NFT art collective. So after fighting in court since 2015, the former hedge fund manager Martin Scherkel was sentenced to 7 years in prison, rightly so as well, for conspiring to commit securities fraud, and he was forced to pay $7.4 million in fine. Good. And one of his prized possessions was an unreleased Wu-Tang Clan album, was seized by the US Marshals and sold for $4 million. Just recently, the public was told that that unreleased record called Once Upon a Time in Shaolin was sold to the non-fungible token collectors syndicate called Pleasurado. So, this, I think, should be massive news because it's been sold to an NFT collection. And the reason why I think that this is massive news, so if you are not aware, everything's going to be digital in the future. Everything can be tokenized. Everything could be a NFT. Properties are going to be done through that. You've already seen artwork. That's a NFT, and we've covered the amount of money that's going through the NFT space. But the reason why I love this is because we could potentially own a little bit of the Wu-Tang Clan's unreleased album. Hopefully, fingers crossed, because if they get their act together, they can tokenize this and let us all buy a little fraction of this album. Hopefully, fingers crossed, because if you've not seen this before, and you're not aware of it, the original Doge meme sold as an NFT for $4 million, and now you can own a piece of it for less than $1. So basically, a company, they bought the original picture of the Shib Inu dog, which then got taken on as the meme for Doge. It was basically, so that got bought, and then when it got bought, you will see who bought it there. The Please are DAO. So the same people that bought the Doge artwork, the Shib Inu artwork for Dogecoin, then fractionalized it. And they fractionalized it into billions of tokens. Hopefully they won't do that many tokens for this. But basically, yeah, you can buy a fractionalized token of the original NFT for $1. So it's unbelievable the way that you can flip something. They could have bought that for $4 million, and if they fractionalize it into $1 billion, I can't see it being that much. Who knows? They might do, but nevertheless, you make fantastic returns on investment. So fingers crossed they do fractionalize it, because I would love to own a small piece of a unreleased album from the Wu-Tang Clan. What an achievement that would be. We will wait to see. Hopefully it will be more popular news, and it will be just around the corner that they've done this, so we wait with bated breath. But yeah, with that being said, let's pull out of this pit stop with the Wu-Tang Clan, and let's carry on to the final stop. As always, the final stop on the journey, we just go through a bit of price news. As you can see, it is a red day. All the red all over the screen there. So Bitcoin's down by 5% to $58,800. Ethereum's down 6.5% to $3,900. Binance down 6%. Cardano down 11%. And that takes it under the $2 mark. But I'm not too concerned about that because, as you can see, everything else is falling hard as well. Solana's down by 9%. XRP's down by 10%, nearly taking it under $1. But it's just held the dollar mark. It's found a bit of support there. Polkadot is down by 10%. And funnily enough, Dogecoin has taken its reign back as a top 10 coin. The Doge community have obviously thought, no, we're not happy about this. Let's rectify it. But underneath it, I tell you what, I salute it. Fair enough, it's come on as a ridiculous coin. Look at how many coins are there. It's absolutely ridiculous in all shape and forms, and I can't believe that it's there, but nevertheless, it is there at number 11. The only thing in green, apart from stable coins, which aren't really in green, they're just going sideways, but it's sat there at 63% up on the day. Wow, it's nearly knocked another zero off. Fair play to it, and wait until you see the dump is all I'm going to say. But with that being said, I am going to wish you a very, very good day. I hope you have a successful day. I hope you have a lovely day. I hope that you manage to crush anything that you do. And if you're still watching this video now, after I've gone through all the price news, thank you so much. It means ever so much to me. If you could please like, comment and subscribe to the channel, that would be great. And with that being said, thank you very much and goodbye.